I think the market is giving the breakouts. It is holding well to all the support zone. Even the global sentiment is started to recover. We have seen good support from the Dow, Nasdaq, and other global indices. Rupee started to get stability below 80 zone. India VIX is holding well below 1820 zone. So all such indicators are telling that this momentum could continue. And there might be the FOMO in the mind of participants. Many of them miss the bus. But I believe that base of the market is shifting higher, and we are expecting this Diwali to be the cheerful mood towards 18,500 to 18,600 zone. So there might be decline of 200, 300, 400 points in between, but that could be utilized for a buying opportunity. So Nifty, which is now near to 17,900, any decline towards 17,500 to 17,777 could be bought for the next leg of rally towards 18,500. So there is the bullish trend. We will be with the trend. Many people keep on asking, should we short here? Should we reduce the long positions? Yes, trailing is more advisable here. Many people ask, can we advise in Hindi? Mandi बाजार में तो नहीं है, दिमाग में हो सकती है. So be with the trend, and that's why we continue to be with positive stance. And from last couple of months, we are continuously talking about buy on decline. If I add the data set up here, we have seen the good run up in the month of July, and historically July always gives the positive trigger. Out of last 10 to 12 years, 80 to 90% probability that July performs well, and exactly happened into the market, and now it's shaping more color to the breakout zone. So yes, we have positive view. Any decline to us 17,500 to 17,777 could be added for the next leg of rally towards 18,500 plus in the Nifty index. So what I understand, in the rising market is better to look at the support rather than resistance, because in rising market you keep on witnessing the formation of higher lows frequently. However, Bank Nifty is finding some hurdle. Many people might be looking at the oversold scenario because RSI in daily scale has gone to 80 zone. So people see the uncomfortable zone here because market has already run up. But I don't see any reason that why should Bank Nifty correct or why should market correct as of now. Yes, already we have seen good run up, so a small dip could be seen, but that could be utilized for the next leg of rally. As of now, the Bank Nifty, which is trading slightly higher than 39,000, has major support near to 37,250. So any decline of 500 to 700 points is the opportunity in the Bank Nifty. And I believe this 37,250 is going to act as a major support to drive this momentum towards 40,000 to 40,500 level. So 40,000 to 40,500 we are looking for Bank Nifty. Yes, we might not be witnessing better risk reward ratio because your Bank Nifty has already rallied by around 7,000 points in last 8 weeks. But yes, trend is intact. And many people might be worried that now what to do when market has already rallied by 8,000 points and it's quite riskier to trade here. My suggestion is better to initiate the option strategy. So you know what is your maximum risk. You don't miss the momentum as well, and you will continue to be with the market with limited risk and by limited investment. So what I suggest here, any decline toward the 500 to 700 points towards 38,000, 38,500, initiate the bull call spread, like buy 39,000 call, sell 40,000 call, initiate the 1,000 point spread at cost of around 300 to 400 points. And you are not going to miss the momentum towards 40,000. And if by chance, unfortunately, market hit lower, then also there's the risk of 300 to 400 points. So trend is intact. Be with the trend. If you are not comfortable here in terms of risk reward ratio, better to initiate in options and option strategy. And that is the biggest blessing from the option market as of now in the hand of participants who miss the bus or who are having the FOMO in the market. The good part is that we are witnessing buying interest across the board. Most of the sectors are participating. Fewer late, fewer laggards. That is the part of market. And what I understand that if you talk about the broader market, till the immediate support is not broken, no need to worry in the market. And for me, the immediate support for the Nifty is 17,777. Now, obviously, the next question is, if market has to head to the new high, what could be the support and what could be the favorable heavyweights which can rule the momentum? So yes, definitely I'll talk about your counter from financials. I can talk about the Bajaj Finance, which is heading the momentum. Auto counters could be in focus. IT were laggards, but yes, some support is there. However, I am not much comfortable for bigger run-up, but yes, they will support. FMCG are likely to take the support. And now, as per your question, if I talk about the Reliance has already formed the bottom. And a couple of weeks back, it formed the bottom near to 2370 zone, and after that it is continuously forming the higher base. And now you have major support near to 2580 zone in the Reliance. Until we hold about 2580, any small decline could be bought, and finally we have target to us 2800 in the Reliance industry. So I believe that Reliance will also support in this rally to take the Nifty on higher zone. But yes, now we are witnessing some limited momentum due to the cold writing activity. So let it decline by 3 to 4% to us 2600, 2580. Grab the opportunity near to that for target of 2800 in the Reliance industry. See, chart is not for trading. Chart knows everything, and chart doesn't speak anything. You need to know the chart. Your charting system has fractal nature. You can put any chart, it will show the direction accordingly. If I'm putting, let's say, 1 minute chart, it will tell me what is going to happen in next couple of minutes. However, lesser you go in the duration, lower will be the probability to go right. So let's say I'm an investor, I can directly go into the monthly chart or quarterly chart to understand what is going to be in the monthly frame or the quarterly frame. So as I mentioned, the charts are having the fractal nature. They don't know anything. They just present what exactly happened, and now what is the behavior and what is likely to happen that you need to predict as per the postmortem of the chart studies. So yes, definitely investment can be done with the charting system, but in that scenario, you need to look at the bigger time frame. So I'll tell you, most of the people who are managing the fund, they are also following the price system for the entry and exit. So let's say for understanding, you have positive view on any companies based on the fundamental, but if you use that company in the charting system for entry, exit, and timing, that can add value. So for an example, if you ask anyone, what is your outlook on Reliance? Everyone say positive, but 2500 and 2600 are the different level. Even if you have positive, if you buy something at 2500 compared to 2600, there is a gap of 4%. So your fundamental may remain same even at 2500 and 2600, but with the help of charting system, you can get that better opportunity, or you can add in tranches, or you can average, or you can leverage whatever you want. So what I understand, even if you talk about the Nifty on the bigger time frame, so if you talk about bigger time frame, I'll open my monthly chart. So in monthly chart, if you notice, from last 11 to 12 months, we are forming a channel. So if I look at the bottom, that is near to 15,200. If I look at the top, that is near to 18,600. And before that, this rally started in 2020. In COVID time, near to the March bottom, that time the market was at 7,500, and one way rally happened from 7,500 to 18,600. So that was the rally of around 11,000 points, and now we are moving in a range of around 3,000 points. So you can understand that after the run up of 11,000 points, a consolidation of 3,000 points, and now the breakout of this consolidation can add to further 3,000 points, but that is on positional point of view. So I believe that yes, bigger time frame can be utilized for adding your investment to get the better entry and exit system or trailing mechanism or mechanism to booking partial profit. So I think one should apply that, but understand that use the bigger time frame. Don't go for the lower time frame, because lower time frame is all for the intraday or short-term swing trader rather than the investor.